Hello everybody, my name is Zach Hartley, and in this video I'm going to walk you through how to use the moving average in order to improve your trading and find buy and sell signals. Here's everything you need to know. Let's go. Okay, so first of all, what is a moving average when it comes to stock charts and trading? Well, the moving average is very simply just this blue line right here, and it represents the average price over a given period of time. You can see that this blue line is kind of going up and down, a little bit delayed from the price here, and it ends at $147.30 here. What that means is that the average price over the most recent period of time that this is tracking is $147.30. Right now, I have it set up to track the last 35 candles, and each candle on this chart represents 1 day. We're currently looking at about a 6-month time period with 1-day candles on it, and this blue line here represents the average price over the last 35 candles. So if you looked at it right here on this day, let's call it September 5th. I don't know what day this is. Let's say it was September 5th and the blue line is at $162. That means that the average price over the last 35 candles was $162. That's how the moving average works, and this line will just continue to build out as the stock chart continues to build out as time goes on. Now, how do we use moving averages to find buy and sell signals? Well, it's actually very easy. This is the exact same chart here, and the buy signal comes when the price crosses above the moving average. So this blue line here is our moving average. That is our indicator that we're talking about for this video. And as you can see, the price action, these green and red candles here, it breaks above this blue line here right at the beginning of July. And when the price crosses above the blue line and that day or that candle closes above the blue line, that is a crossover of the moving average, and that represents a buy signal. When you get the exact same thing happening the other way and the price crosses below the moving average, or the red candle here crosses below this blue line and closes below it, that is a sell signal, that is a bearish signal, and that is when you want to get out of the trade. So just for example here, if you had bought in at the beginning of July here and you had sold out at the beginning of September, when you got your buy and your sell signals, you would have made a nice, what is this, 162 all the way down to 142. You would have made $20 on a $142 investment, a nice probably 15 to 14% return, just by trading on the moving averages. Now, I'm not saying that's what you should do. I'm just saying that's how clear and nice these signals can be when it comes to the moving average. Now, yes, you get buy and sell signals when the price crosses above or below the moving average, but what you can also do is add 2 moving averages to the same chart. What you should do in this situation is make sure that one of the moving averages is a longer moving averages, like in our situation it's 35 days, and then the red moving average, this second moving average, is calculating a shorter time period. In this situation, it is calculating the moving average based on 9 days, and therefore you have 2 different moving averages. One of them is moving closer to the price, and one of them is a little bit more gradual and a little bit more steady. The reason you might want to use 2 moving averages and set it up like that is because when the moving averages cross over, it can also give you a buy or a sell signal. So for instance, the red line right here is our shorter moving average that is only tracking 9 candles, and it crosses above our blue moving average right here at roughly $140. We can then see that it follows all the way up and it crosses back through our blue moving average right here at roughly $164, and that would be our sell signal. So when our fast moving average crosses above our slow moving average, like what happened here at the beginning of July, that is a buy signal. And when the fast moving average crosses below the slow moving average, like what happened right here at the beginning of September, that is a sell signal. And so having multiple moving averages can give you additional signals and give you additional information about what is happening in the stock. You can also use them to just identify, are we in a bullish pattern or are we in a bearish pattern? You'll notice right here that we crossed above our short moving average, this red line right here, and that was actually the start of a brand new bullish run all the way up to 176. That can be your first signal that, hey, this bearish trend might be coming to an end. And then when we cross above the blue moving average here, that could be another signal of, hey, this is starting to look really, really good. And once you get the final crossover of the moving averages, that can be your final confirmation that it's time to enter this position. Now, when it comes to moving averages, there's actually 3 different types of moving averages, and so far I've just kind of talked about the simple moving average. What that does is it takes the number of candles that you want that moving average to track. In our situation, it was 35, and it takes the closing price of the last 35 days and then just averages it out very, very simply. That's why it's called the simple moving average. It is literally just an average of the last 35 closing prices. Next though, you have the exponential moving average, and what this does is it puts more weight and more focus on the most recent prices. So you can see this chart down here where it says linear versus exponential. This green line right here is the exponential line, and what it's showing you is that the oldest data here is going to have the least weight, but the most recent data here, or the most recent candles, are going to hold the most weight when it comes to calculating that moving average. And that distribution is going to happen on an exponential curve. So it is not going to be steady and linear. It is actually going to be distributed on an exponential curve. So the most recent information is going to be much, much more valuable than the information that comes before it. That is what is called an exponential moving average. And then you also have a weighted moving average. A weighting moving average is going to be much more linear than the exponential increase, so that the most recent data is just slightly more important than the data that came before it, and it's going to be evenly broken down all the way to the end of the period that you were tracking. In our situation, it was 35 candles. And so you have 3 different types of moving averages to use. When it comes down to choosing which moving averages that you should use, what I would do and what I would recommend is start with the simple moving average or the exponential moving average and adjust the parameters of that moving average until you get clear signals and clear indications. Now, just to give you an example of what I mean by that and actually walk you through setting up the moving averages, I'm going to pull up my charts right now just so that you can kind of see everything. There we go. And so here we've got Apple stock chart over a 6-month period with 1-day candles right here. And to add a moving average, we're going to go to studies, we're going to go to trend indicators, and we're going to click on moving average. This is going to add in an automatic 20-day simple moving average that is based on the closing prices. That is what this information means up here. Now, just for your information, this dashboard, this stock chart, and everything that I use for day trading and swing trading, I use Questrade for it. I am based in Canada, and if you're interested in a new broker or trying out Questrade, there's a link in the description that will give you $50 in free commissions to get started. So it will cost you absolutely zero to try out the platform and see if you like it. If you're in the US, I also have a link down below for Webull that will give you some free stocks or free credits when you open an account. Now, let's jump back into this. So this is the stock chart here. We've just added our 20-period simple moving average that is based on the close. If we want to add another moving average, all we're going to do is click on trend indicators. We're going to go to moving average, and it's added us another 20 SMA based on the close. We don't want that because it's just going to completely overlap the blue one. So we're going to double click on it, and it's going to open up a new window right here where we can change the parameters of it. So we've got 2 different moving averages up here. Choose whichever one you want, and then we are going to leave it as the close. That's just personally how I like to leave it. You could do it on the open, the high, or the low, whatever you want. I usually just leave it on the close. And then this one, we're going to change from a simple moving average to an exponential moving average, and we're going to change it from a 20-day time period or a 20 candle period all the way down to a 9 candle period. We're going to click on OK, and now you can see our red line here is our exponential moving average. It's moving much faster and much more jaggedy than our simple moving average because it is over a shorter time period compared to the simple moving average, which is over a 20 candle time period. Now, as you can see here on this blue line, we can see that we actually crossed above it. We closed a couple times and then we came back down below it. It happened again right here, and it happens again in one other spot right here. And so as of right now, we're not getting super clear signals from our 20-day moving average. So in order to adjust that, what I want to do is I want to smooth it out a little bit more by extending the timeline and the periods that it covers. So instead of 20, I want to change this to 35. We're going to click on OK, and now you can see that we're getting some really clear signals. The stock is never closing above our moving average until the trend actually changes. That's what we're looking for, and that's what I mean by adjusting the parameters of your moving average so that you're getting clearer signals. You want to get very clear buy and sell signals based on historical price data so that you have a clear entry, a clear exit. It's a profitable entry and exit, and then you can use that moving average moving forward. You can see here that we're now crossing above our moving average. That is a bullish sign. It might be a good time to enter this stock. Okay, now just to repeat the strategy here, number one, we use the moving averages to understand the direction and confirm our entry points. If the stock is above our moving averages, that is a bullish indication. If it is below our moving averages, it is a bearish indication. And as traders, we usually want to be buying into the trend, so it's definitely something to keep aware of. Secondly, you can use two moving averages so that when they cross, it can also give you buy and sell signals, and you can adjust the timelines based on what will give you the clearest buy and sell signals. Me personally, I usually stick to the simple moving average and the exponential moving average. Now, in summary for this video, moving averages are a tool that you can use to improve your trading, but they should not be the reason that you buy or sell a security. You should be using it in combination with the volume, with the price action, with what's going on in the market, with how the indices are doing, what's happening in the VIX. This is just a tool that you add to your tool belt that you use to gather information about the market, to create a trading plan, to create a trading opportunity, and to execute your trades. But the moving average should not be the only reason that you enter or exit a stock. Now, if you're interested in learning more about that, and especially on the day trading side, I've got a new day trading course that I just launched. It is fully available, and there's over 8 hours of content that will walk you through step by step everything you need to know to get started day trading from scratch. There is no experience required. I am going to start at the beginning, and by the end of the course, you are going to be ready to go to sit down at your computer and start a day trading career. It is going to have everything you need in it. It's going to get you started on a practice account so that if you lose money in the beginning, it's going to happen in a practice account, and by the time you make money, you'll be ready to go. You'll have everything you need to know, and you can even join my private Discord trading community. That's where I'm posting all of my analysis, my trades, and everything that I am doing. And if you're interested in checking it out, you can use the discount code Moving Average for this video, and it will give you 50% off the entire course. If you get any value out of this video, please remember to click that like and subscribe button. The links are down below if you want to check anything out, including Questrade. Thank you so much for watching, and we will see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.